I'm not convinced that we've seen the last stopgap bill, frankly. And we're going to perhaps see the last of these 12 appropriations bills passed one month before September when the new fiscal year starts, which it's getting a little bit ridiculous,
It is.
being 6 months into a budget cycle without having passed the budget itself, right? But
Absolutely.
silly.
So I don't know if I can say, speaking of ridiculous. Hello out there, and welcome to this week's edition of GeoPortfolio. I've got a great team with me today, and we have a lot of interesting topics to cover. My name is Mikkel Rosenvald. I'm head of geopolitics here at Steno Research, and this is our weekly rundown of geopolitical matters that are important to your portfolio. With me today, I have in the studio, Ulrik, welcome to you.
Hello.
Our energy guy here at Steno Research, and live from Paris, we have our senior French correspondent, Anna Sanea. Welcome to you as well.
Happy to be here.
Great. So today we're going to touch a little bit upon the U.S. government shutdown, as maybe being averted, maybe not. And then we're going to look at the situation in Gaza and the spillover to oil markets, especially. We know a lot of you are interested in that, and we know there's a very strong correlation. So we'll get back to that in a minute. But let's start with the situation in Washington. These guys, one of them is stepping down in November. We heard Mitch McConnell, probably about time. But it seems like, let's just start with the situation. We're looking into, we're recording this on Thursday, February 29th. We're looking into two shutdown dates, May 1st and May 8th, March 1st and March 8th. It seems like some kind of deal is being set up to kick the can down the road a little bit, Anne. Is that correct?
Yes, so the 4 congressional leaders have announced that there is a deal underway, at least, to continue this laddered approach for a shutdown deadline, but now pushing it back once again. So it's now 6 appropriations bills, which will have a new deadline in a week from now, so 8th of March, and the remaining 6 ones, the more contentious ones, will be postponed to March 22nd. That being said, it doesn't mean that we're completely in the clear in terms of avoiding a partial shutdown on Saturday, as they have cut it so close that even from just a technical point of view, it will be kind of hard to vote upon this stopgap in time before Saturday. It will require, just a quick note, 100, like all senators will have to agree on fast tracking the stopgap to get it voted across. But still, no cause for concern. Even if it ends up being few hours or even a day or so late, it should be a cause for concern, given that they have agreed on the stopgap.
Absolutely, and I mean it almost seems like markets are, as we talked a little bit about last week, are getting used to this. It's more or less a routine issue for them to be looking at these shutdowns every once in a while. And maybe we're even getting to a point where we are going to be doing this on a monthly basis. I mean, we're looking at an election in November. In my thinking, at least, the closer we get to the election, the harder to reach a comprehensive appropriations and budget deal. So we may be looking at this ghost once every month, more or less, either until these guys are elected out or they die off, or what might it be? I mean, it's an incredible scenario to look at.
Seems like Mitch McConnell is always 5 minutes away from being dead, right?
Yeah, exactly. He's going to step down in November, and even though I have great respect for his career, it's probably about time with some fresh blood in some of those. Speaking of that, I don't know.
I think as we've mentioned, I think as we've mentioned before on this podcast, is that the most conservative wing of the Republican Party are actually pushing quite heavily for what they call a year-long stopgap. So we essentially won't have a 2024 budget. And the reason why they're pushing for that is because there's this little legislative wrinkle in the June debt ceiling deal, which states that if there's not going to be 12 appropriations bill passed, that means an automatic cut of around $75 billion in defense spending. So there's still motivations to get all these individual 12 spending bills passed. But as you say, it's going to be I'm not convinced that we've seen the last stopgap bill, frankly. And we're going to perhaps see the last of these 12 appropriations bills passed one month before September when the new fiscal year starts, which it's getting a little bit ridiculous,
It is.
being 6 months into a budget cycle without having passed the budget itself, right? But
Absolutely.
silly.
So I don't know if I can say speaking of ridiculous, but let's move on to another issue. I love this picture. It's of the president. Obviously, he visited Seth Meyers, the big U.S. talk show, earlier this week. He seemed to be in a good mood, even though his government is about to shut down. Perhaps he's getting used to this as well.
Or he just forgot that it was about to shut down.
That's possible as well, like absolutely. Anyway, what he did remember, or what he announced at this this talk show appearance, is that the prospects of a ceasefire in Gaza are getting increasingly more real. Biden basically told us that Israel have more or less accepted to cease military operations throughout the Ramadan month, which begins during March. And we're getting a lot of hints that right now a peace deal or at least a ceasefire deal is on the table for Hamas to agree upon. Furthermore, we've seen indications that both Hezbollah and the Houthis are that their mindset is that once Hamas agrees to something, they're going to stop their attacks as well. So a lot of problems within the Middle East are linked to these peace negotiations. It's probably going to be some kind of temporary ceasefire. I don't think we're going to see a grand peace plan down here, but we are getting closer to something at least. And when that happens, or if that happens, we should probably say at some point they have to stop fighting. I don't know, but anyway, we've seen some indications that once we get close to a ceasefire, oil markets begin to fluctuate heavily. These are some headlines for the past couple of weeks. We've some instances with rumors of a ceasefire coming, which led the oil price to drop. Then it turned out that the ceasefire wasn't going to come. Prices went back up again. So we have some quite direct indications as to how oil markets view this.
I mean, exactly as you described it, Mikkel. It's very binary at the moment for oil. If there is a ceasefire, or if there is at least are hints of a ceasefire, then oil is down, and the opposite is true when there is no signs of ceasefire.
Absolutely, and we're currently contemplating how to play this in our own book. We're still within oil, but it's there's a deadline to that.
I would say we are contemplating getting out the greater the possibility of a ceasefire is. So the closer we move to a ceasefire, I think we will start to consider even greater exiting our oil bets.
Yeah, exactly. So it's a matter of staying on the train right until it hits the station.
Yeah.
Anyway, so if we look a little bit more long term, like you're doing a lot of studies.
Exactly.
We brought this chart. Could you just take us through what we're looking at here?
Yeah. So on the dark blue line, we have the ISM orders to inventory. And on the light blue line, we have the OPEC crude output. And the interesting thing here is that oil really hasn't reacted to the global green shoots that we are seeing in PMI numbers across the globe, which is sort of a conundrum, right? Because one would imagine that oil would react to these global green shoots, but it hasn't really. And at the end of the day, what markets really worry about is that OPEC will start to increase their outputs, and then the short sellers are just standing on the sideline, ready to pounce. So that's basically where we find ourselves. And the only winner, of course, in this game right now is the US. So
absolutely,
I guess you could say that we currently have the world's most unexpected transfer union between OPEC on the one hand transferring to the US indirectly by keeping up the oil price, which of course US gains from.
Absolutely, and that's the absolute long-term analysis of this, is that the US have increased their oil production so much that they're more or less playing both sides of this bet. It's good for the US economy to have lower oil prices, but higher oil prices means higher revenue.
Yep.
On the US oil production.
And I guess you could also say this is what it looks like when you lose a monopoly.
Yeah.
from OPEC's point of view, because back before the U.S. shale adventure, this wouldn't have been possible, and then OPEC would have been in a far greater extent able to dictate the market prices. But right now they find themselves in a scenario where they are just having to cut output time and time again, and they really don't get a lot out of these output cuts.
Absolutely. So the bottom line here is keep your hand on the trigger, your finger on the trigger on your oil beds out there. It's going to be a huge important this, and we may even see some medium to long term effects as well into shipping rates and global trade if we're, as a result of this ceasefire. That's why we're so focused on the timing of this. We're going to keep that focus to keep up with our analysis, both on the political side of things, on the energy side of things. Go log on to sustainableresearch.com. You can either sign up for a free subscription to gain full access for 14 days, or you can sign up to our new free newsletter. We're deploying a bunch of macro nuggets, weekly newsletter to give some glimpses into our thinking. So that can be sort of a way to get a little taste of all the things we're doing here at Sustainable Research. That's basically all for today. I'd like to thank you, Anne, for joining us from Paris.
My pleasure.
Great. And thank you, Ulrik, for joining with a lot of the energy insight. We'll be back next week with news on all the geopolitical events that matter to your portfolio. Thanks a lot for watching.